Looking to turn your $1,000 into multiples in 2023? Here's the ultimate guide to investing smart and making your money work for you. Before continuing the video, press the like button and subscribe to our channel. Also, don't forget to turn on the notifications to never miss any of our upcoming videos. Who holds the title of the fastest self-made billionaire? While Warren Buffett took 55 years to become a billionaire, Jay Walker accomplished this feat in under a year by launching Priceline.com during the dot-com bubble. However, his wealth was not sustainable and plummeted after the bubble burst. In contrast, Buffett remains at the top of the billionaire list and shows no sign of losing his wealth. This highlights the importance of building long-term wealth rather than quick gains. The game of money is challenging, competitive, and ruthless, and those who don't understand the rules are likely to fail. The majority of people work hard their whole lives, but fail to accumulate wealth because they don't know how to make their money work for them through investing. Assuming you have an extra $1,000 in your bank account, resisting the urge to put it in frivolous spendings is essential. Instead, you can invest that money wisely. However, many people are unsure about how to invest their money. Should they invest in real estate or the stock market? What kind of stocks should they buy? Is $1,000 enough to start investing? These questions will be addressed and more in this video. Today, let's talk about investing and how it works. For instance, imagine you have saved up $300,000. You have two options. Buy a flashy Ferrari to show off your wealth or buy real estate like a house and rent it out. The latter option generates a monthly income of $2,000, and if you can ever decide to sell the property, you can get back your original investment or even more if its value has appreciated. Essentially, investing helps your money grow more money, but investing in real estate requires a significant amount of capital. So what you can do with, say, $1,000? You can deposit it in a savings account and earn profit. But why would a bank pay you for keeping your money there? The answer is that they take your money and loan it out at a higher profit rate, sharing a portion of the profit with you. However, the profit rates for deposit accounts are pretty low, with the highest being around 0.8%. If you invest $1,000 in a savings account, you'll only earn $8 extra after a year. Investing $1,000 in 2023 requires careful consideration of various options. While deposit accounts may seem like a safe investment option, they currently offer meager profit rates that do not keep up with inflation. If your savings are not earning at least the inflation rate, your money's actual value will decrease over time, and you will be able to buy fewer goods each year. The current low profit rates on deposit accounts are a result of the pandemic's impact and the Federal Reserve's decision to lower profit rates to encourage borrowing and spending. However, in the future, as the economy recovers, the Federal Reserve will eventually increase the profit rates, resulting in higher saving account rates. One key principle in investing is diversification. Diversification involves investing in a variety of assets across different industries, sectors, and geographies to spread out risk and minimize losses. By spreading your investments across a range of asset classes, such as stocks, bonds, real estate, and commodities, you can potentially lower your risk of losing money if one of those investments underperforms. The objective is to avoid putting all of your eggs in one basket, so to speak. Diversification can also provide an opportunity for growth. Different asset classes may perform well at different times, and having a diversified portfolio can ensure that you capture some of the upside when certain sectors or geographies outperform. For example, during an economic downturn, bonds may perform well as investors seek safety, while during a bull market, stocks may outperform. It is important to note that diversification does not guarantee a profit or protect against loss. However, it can be a helpful strategy for managing risk and optimizing returns in the long term. Additionally, regularly reviewing and rebalancing your portfolio can help ensure that your investments remain diversified and aligned with your finance objectives and risk tolerance. When investing, it is important to keep in mind that the value of your investment may go up or down. Before investing, it's essential to access your risk tolerance and invest accordingly. Investing in an index fund is a good option for those who don't want to risk losing all their money in the stock market. By investing in a diverse range of companies, you can minimize the risk of losing money due to the failure of a single company. While past performance is not a guarantee of future results, the historical data for the S&P 500 index shows that over the long term, the index has provided solid returns. The S&P 500 index tracks the top 500 companies in the US, including some of the biggest and most successful companies in the world. It's a low-cost, low-risk way to invest in the stock market, and it allows you to not only spread your risk across multiple companies, but it also means you don't need to worry about picking individual stocks, which can be time-consuming and stressful. When choosing an index fund, it's important to look for ones with low fees, as this can aid into your returns over time. Some popular options to consider include the SPDR S&P 500 ETF Trust, SPY, iShares Core S&P 500 ETF, IVV, and Schwab S&P 500 Index Fund, SWPPX. To get started, you'll need to open a brokerage account with a reputable firm. Many online brokers such as E-Trade, TD Ameritrade, and Charles Schwab offer commission-free trading and low account minimums. Once you have funded your account, you can start buying shares of your chosen index fund. By starting small and investing in a diversified index fund, you can take the first step towards building long-term wealth. We made a conscious effort to simplify this video as much as possible, so that anyone who wishes to invest can get started without any delay. Often, when people decide to start investing, they become overwhelmed by the sheer volume of information available on the internet, which can be discouraging and cause them to give up. We aimed to address all the commonly asked questions in this brief video to help you get started on your investment journey. If you found this video beneficial, press the like button and subscribe to our channel for more finance updates. Thank you for watching, and we'll be back with more useful content soon. We hope this video has been informative and helpful to you. Please let us know in the comments below if you have any questions you'd like us to cover in future videos. Also, tell us the biggest takeaway from this video that you'll apply to your investing strategy. Thank you for tuning in and watching.